From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for November 27, 2017. I hope you had a great long holiday weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview, of course, of each U.S. currency pair in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. And as always, be sure to use appropriate risk management strategies in all trade setups. Let's get started here on the USDCHF, looking at the daily time frame. Two different trends that we've been studying in the live trade room. Of course, the previous uptrend, the red trend line, and the current fall that we're seeing here for the dollar franc. The black trend line representing the beginning stages of a pullback or downtrend here for the dollar franc. The question, of course, of the week will be, are we going to see the continuation, the sell-off of the US dollar, continuation lower as it approaches back down towards the 100 period moving average and the longer-term blue trend line from the left-hand side, or are we going to find a base of support and start moving back up in agreement with the red trend line? We don't know that for sure, but we'll definitely watch for clues and evidence in both directions. I will point out along the green shaded area, 97.50, 97.65, we have some significant historical resistance back here on the left-hand side. So I would suspect that as we approach the mid-97s, we will see some significant support, even getting closer to the blue trend line and the 100 period simple moving average. It is falling. So I think that's the direction we want to focus our efforts on right now, is this fall that's happening here. We're keeping an eye on clues for reversal to go back up, but focusing our efforts on the fall. So that being said, zooming it in here, we can see that it's settling down 1, 2, 3, 4 days now, right around this pink shaded area. So this becomes an area of interest for us today. The pink shaded area happens to be the 382 Fibonacci retracement level of the previous red trend line, by the way, sitting right in the middle of that pink shaded area. One of two things is going to happen here. Either we're going to see clues to reversal and it's going to go back up, challenging back towards the orange shaded area or higher, or it's going to break down through the pink zone and continue to fall back down to the green zone or even the yellow zone lower towards the 100 period moving average. So we want to focus in on this pink zone today. Bounce, goes back up, break, goes lower. Take it down to the 4-hour time frame. That's not really going to change a whole lot. You can see it's just been toying around really since last week, toying around with this pink zone. At least at this stage of the game, I don't really have any interest in trading it until or unless it breaks out of this pink zone. 1, 2, 3, 4, 5, 6, 7 candles now. 6 or 7 candles just settling out into this pink zone. It needs to either break it, finally get underneath it, stay underneath it, and go lower, or hold above it and start moving higher today for the franc. Again, my preference, of course, with the direction of the trend that we've seen over the past few days, is it finally has some effort to break underneath it. I'm interested in this candle here. The smaller body long wick on the bottom could be a clue to some infusion of buy orders, but definitely a breakdown here. Looks for the continuation lower for the dollar franc. Looking over to the euro dollar, just the opposite really. We had the blue trend line, then the black trend line, and really if we begin to zoom it in, not just the black trend line, but now we see a little bit of a rise happening here for this currency pair, the rising black trend line that we see here. Let's change the color of one of these so they're not the same. Let's make this one red. So we'll have a blue, a red, and then a black trend line. So currently the black trend line is the direction the market's been going the past few days. If we're going to buy it, we don't want to buy into resistance. We are at resistance, 1.194575, the orange zone at the top. We've seen resistance here before. You see these black circles showing resistance here before. So I don't think buying within and under the orange zone is a very good idea for the day today. If we're going to buy it, we either want it to dip back down to the purple zone, the black trend line, kind of like what it did right here at the 100 period moving average. We want it to come down to the purple zone or eventually break above the orange zone. Then, of course, if it can do that, we challenge the resistance highs all the way back into the 1.2 thousands for the euro dollar. So we definitely focused in our energies on this orange zone, purple zone as potential opportunities. Let's go ahead and take it down to the 4-hour time frame. And as you can see, just kind of settled out underneath the orange zone, not really breaking or attempting to break it. So it needs to get above 119.45.75. A break above it continues the upside. Otherwise, a dip back down, just like what it did over here. Again, back down to the purple or maybe even the green zone gives us a different opportunity to buy it. There's no evidence that it's going to go down. No price action that tells me that it's going to turn around and go down. We're just at resistance. So I'm not just randomly selling it. If I'm going to sell it, I need to see price action that indicates it going down, and it's not really doing that. So nothing telling me to sell it. It's not the right opportunity to buy it yet, so definitely waiting for the next setup here for the euro dollar. Moving over to the GBPUSD, similar situation. We saw the rising blue trend line, some congestion down here. It settled down here for quite a long time above the blue trend line 100 period moving average. It's now been moving up. Let's begin to zoom it in on this. Now been moving up over the past few days. It is interesting. Back here where the black circle is, some resistance there. We're now challenging above that resistance. So that is 133.50, 133.15 at that pink shaded area. Attempting to get above it today. I say attempting because today hasn't really closed above it. It's just challenging it because by the end of the day today, we don't want to assume it's going to stay above it. It could, by the end of the day today, get back underneath. If there's some sudden infusion of sell orders, it could get right back underneath that ping zone, and then you're going to be unhappy you bought it above at the highest point that it's been for quite a long time. So don't buy it at the top. That's what I tell the trade room quite often. Don't buy at the highest high. Fibonacci high to the low of this area, just this area that we're looking at here, puts the 618 just above, a touch above the blue shade area, 134.16. Let's go ahead and zoom it down to the 4-hour time frame. And as we get down here, we can see that challenge, that attempt to get above the pink zone. The question, of course, of the day will be, is it going to stay above that? And that's great. Fine if it does. If it stays above there, we'll look for it to go higher. But we are at the highest high. I'd never want to sell at the highest high, or sorry, buy at the highest high, because there's just limited profit opportunity and higher risk for that matter. Your stop loss right now would be under the ping zone, so your risk is higher if you were even thinking about going long. So we need to either break above and then dip back down on top of the ping zone to buy it, or go much lower. So I don't think buying it now is a good idea. Selling it, there's no reason to go short right now for the pound dollar. Moving on over to the USDCAD. We're kind of stuck in a period of congestion or a range. We're at the bottom of that range. Blue trend line was moving up, but now we're underneath there, but we're still inside that black box. Let's zoom it in on that black box. Take a look. Past couple of weeks, we've just been stuck. Resistance at the orange zone, 127.80.15, 28.15. And the yellow zone, 126.70 up to 127.10. So we're kind of stuck here and have been for a few weeks. So at the yellow zone's our main area to focus in on. If it finds support and starts bouncing back up, like it did over here, we could target back to the orange shaded area. If it breaks through the yellow zone, which it hasn't done yet, but if it does break through the yellow zone, 126.70, we'll look for it to go lower at minimum, back down here into the low 126 level, the pink shaded area that is just below the yellow zone. So we don't know what's going to happen here. So we want to watch for price action clues that help us identify the next move. A breakdown of 26.70 is going to go lower. Staying above it and back above 27.10, we could be looking for it to go back up. 4-hour time frame. Again, nothing really new here on the chart. Is just holding up inside that yellow shaded area. No real solid evidence of reversal to go back up. No real solid evidence of breakout to go down. So we're just kind of waiting somewhere around this yellow zone for the next setup. Either a sudden infusion of buy orders to go back up or a breakdown to go lower for the dollar CAD. Moving over to the US yen, here's some interesting things happening here. Long-term viewpoint 2017, basically. This big blue box that you see here on the chart. The trends down, up, down, up, down, up, and now we're starting a down phase. Again, nothing really new here. We've been studying this all year long. Let's begin to zoom it in. Take a look at this. It broke underneath over the past 3 days. It has pushed underneath the 100 period simple moving average and this green zone that we studied as support on the left. 111.55, 111.80 is the green zone. So as long as it's underneath there, we now have established that as resistance with the green zone, historical supports, 100 period moving average. Challenging the orange zone, 111.0 is the bottom of the orange zone. So a break underneath there, the orange shaded area, we'll look for it to continue to go down. Next area to look at would be back down here towards the pink zone. That's 110.60, 110.45 if it breaks underneath the orange zone, which it hasn't done yet, by the way. No reason to buy it. It's in a downward slide. It's underneath the 100 period moving average. No reason to buy it. But looking for the breakout underneath 111 for the continuation lower. 4-hour time frame won't change any of that. It's just challenging. It's testing. I don't call this a breakout. I call this a test. trying to challenge smaller traders in, or entice smaller traders to get into the short. So unless it opens and closes, breaks out underneath 111, I'm not selling it yet, but that breakout could be the opportunity we need for the dollar yen. Moving over to the AUD/USD, three different trends really. The red trend line down, blue trend line up, a little bit of a retracement, black trend line falling again, and now we're making a little bit of a retracement again. So we're definitely watching this retracement. If you think about the blue trend line in the middle, we're making a little bit of a retracement again, aren't we? So let's make that blue so it's looks very similar to the previous rise. So we're seeing that happen right now, where we're seeing fall, retracement, fall, and now we're in the retracement phase again. The question is, will it retrace and then find resistance and go back down, or will it continue to go up and start to form a new trend? I'm sure a lot of people over here thought it was going to turn around and go back up, and then it went lower again. So we definitely want to watch this for opportunities of reversal to go back up, but we also want to watch it for clues that it's going to turn around and go back down. Zoom it in here. I think this orange zone will be our key point today, key player today, 76.20, 76.35, 1, 2, 3, 4 days now, challenging that as resistance. If we're going to buy it, if we're going to look for it to continue to go up, it needs to break that barrier, 76.35. If it can't, we may see some turnaround back down towards the purple zone, the blue trend line there. That may be our next opportunity. So back down underneath 76.20, could be looking for it to go lower. Back above 76.35, could be looking for the continued retracement or reversal back higher again for the Australian dollars. 4-hour time frame really won't change that. I think it just gives us an interesting viewpoint of this orange zone. Now, I think right now the buyers are trying to assume control of this currency pair as it challenges 76.35, but let's not assume. Let's let them battle it out, staying above the orange zone. We could be looking for it to go higher for the Australian dollar. Moving over to the NZD/USD again, we have been in a downtrend. Let's not forget about that. We challenged last week underneath the historical support low, bottom of the blue trend line. We even got underneath it. We even opened and closed underneath 68.15, the blue zone, where it found support and reversal last time, and then it turned right back around and went back up. So we're in a transition phase down here, bottom of the red trend line. The questions of the week and the day will be, are we going to see it continue to go up, changing the trend, which was a downtrend? Is it going to continue to go up, or is it going to find resistance underneath the last high, somewhere underneath the yellow zone or even the orange zone, and turn around and go back down? So we want to watch for those opportunities. Probably the yellow zone, 69.15.40, will be our area to focus our energies on today, at least for the New Zealand dollar. The yellow zone, let's take a peek at that. We might adjust this a little bit in the trade room later on, but 69.15.40, as long as it's underneath it, that is resistance. Just look at the last time we were here. And of course, a break above that, we may look for further retracement higher. Again, I would say at minimum, you don't want to buy or go long under the yellow zone. The last time we were here, it found resistance and went down, so don't buy underneath the yellow zone. If you're going to buy it, it either needs to dip back to the green zone like it did here, or it needs to break that yellow zone to go higher for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.